Welcome back, traders and investors, to Benzinga's pre-market prop, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Jerremy Newsome on the line, CEO of reallifetrading.com. Jeremy, how you doing this morning?
Joe, I'm doing good, man. Thanks so much for asking. How are you doing, buddy?
We're doing good. We're running a little
Great.
bit of little technical difficulties here with me here, but we'll get over that. But first, I just wanted to ask you, how was your vacation?
Vacation to Mexico, that went great. That was phenomenal. I had a cruise, and I actually had 6 or 7 other traders join me, and me and my girlfriend and another friend. We went. It was a great time, man. Progreso and Cozumel were the 2 places we stopped in Galveston. So it was kind of quick, like a 4 or 5 day cruise, but it was a great time.
Jeremy, to kick things off, I'd love to see if you followed the Fed announcement at all this week. I mean, it was kind of a non-announcement because they're still cautious, watching economic data that wasn't as strong as they were hoping it would be. I mean, what's your take on this situation with interest rates?
That's a very good question, actually. I do follow it lightly, not too terribly much. I follow it about as much as I follow the Big Bang Theory, which is, I got to keep a track of Sheldon. But the Fed, with not raising the interest rates, they mentioned that they're probably not going to raise them until September. Again, just kind of giving us that maybe they will. And at some point, they're going to have to, right? And they say that they want the economy to be strong enough so that they can raise interest rates. And I think that's very, very interesting that they're probably basing the strength of the economy on jobs and on, I really think, the stock market, right? I think they want the stock market to be as high as possible. So when they do raise interest rates, maybe it goes down a little bit, but I still don't think it's going to be a massive, massive correction. I mean, 10 to 30%, anywhere in that general range would be very, very healthy. So I personally think the economy is doing really well right now, actually, ironically enough. I mean, oil's down, cost of everything you need is down, energies are down, real estate's up. I mean, things are doing pretty healthy right now, at least in my opinion. So I think they're just waiting for the market to be a little bit higher.
All right, Jeremy, I want to talk to you. You have a very distinct style, and I've picked it up while interviewing you. And you're just kind of like, you see what's moving in the pre-market, you get the momentum, and then you pick your spots. And when I see a stock trading, I'm saying to myself, oh, I bet you Jeremy's trading this today. And I always don't know what your P&L is going to be, but I thought you might be picking on Oracle yesterday. So could you just walk us through, what your game plan was, how you traded it, and then I got a few follow-up questions for you.
Oh, yeah, absolutely, man. So Oracle, and I appreciate you saying that. That means a lot, Joel, because, as far as trading and being able to pick up on how I trade, that means a lot, just because the way I try to day trade, or the way I try to trade in general, is I follow the crowd and see what everyone's talking about, what everyone's doing. And so there's a lot of news, there's going to be a lot of volume, and there's going to be some type of direction there, right? So Oracle, early in the morning, I was looking to play it short, and I was, in fact, watching the 1 minute and the 2 minute pretty hardcore all morning. And I had a really good friend and a good trader, Jonathan Higgins. He's a Canadian friend and trader of mine. Took it on the 2 minute rollover. So the 2 and 1 minute rollover really was right around 41.67 ish. So 41.62 is entry. We're talking 8:36 my time, so 9:36 Eastern. Stops around like 41.82. So you're risking about 20 cents.
Wow.
On your stop, yeah, and you're basing that on candles, that you're anticipating it's going to roll down a little bit farther, but that's your risk. Your risk is 20 cents, and you're hoping to make 40 cents or more. And the really profitable move came in around 10 o'clock Eastern, when it just came into some moving averages, dipped one more time, and then that was it. That was the final leg that we made the profit. But then I did try to get back in very lightly later in the day, but it just never triggered. I was trying to get in like 41.11, probably around 11:30 Eastern, and my stop was about 41.25. So I know you guys can't see my screen, but I was just kind of marking it out there. But Oracle in the afternoon, Joel, and just hear me out on this one. I was bearish in the morning, right?
Okay, this is what I was going to get to.
I did not expect that bullish thrust. I was looking for a rollover the entire afternoon, and it just never happened. So I missed all of that bullish move, all of it, which is fine. I mean, I made some money in the morning. It's good. Everything's okay. But, dude, that just blew me away, that move that we had in the afternoon. Phenomenal move. So at this point, I really do think Oracle, just as a follow-up, probably hangs out here for a little bit, bounces around, but likely probably continues higher up to about 45 and then 46, because that kind of volume and that kind of buying after that type of gap, in my opinion, shows some serious strength.
You should have been listening to the show yesterday, because Dennis said this is one of the perennial buy the dip stocks. Now, if you would have been buying early, you would have gotten crushed. But I mean, so it's always a matter of timing.
Nice.
Couple things on that. One, wow, you only risked 20 cents on that trade. I mean, wow. I mean, that's a blip in a stock moving like that. That's pretty incredible. I mean, it's great. Do you actually put a physical stop in the market, or do you eyeball it?
Man, that's a good question. 99% of the time, I actually do put a hard stop. And the times that I don't are the times I can just sit there and watch it for the next 10, 15 minutes if it's a scalp or something, and I know I don't have time to actually place a stop. I have in my head, okay, this is where I'm going to get out. So I enter, and then I know if it's a scalp, right, we're talking 2-3 cents. I know for a fact that I'm going to get stopped out 70% of the time. So I just go ahead and go in knowing that. But I do a lot of proprietary trading when I day trade. So that 20 cents, it is a blip. You're totally right. But on day trade land, 1, 2, 3 minute candles and sometimes the 5 minute candles, 20 cents on a $40 stock, it's not that much, but you're hoping for the 40-cent move, and it's a 1 to 2. You're risking 20 cents to make 40, and that's just how day traders live. That small risk, and then obviously you're hoping for more return on that. So sometimes, man, I'll risk JBL. I also shorted JBL yesterday. I was trying to remember what else I did. So Oracle and JBL. And JBL, I missed getting stopped out like 7 times by 1 penny, by 1 cent. So that happened the other way. Many others have many times before. But I was excited that it actually worked out because, anyway. But, yeah, man, I do a lot of stock trading with the 40. Let's say a $75 stock and below. I trade the shares, proprietary style, using other people's money, using other leverage. And then when I day trade options, I'm only trading like 10 stocks, Apple, Tesla, Google, SPY, the very, very, very popular ones. I will trade those day trade style with options.
Who do you clear through?
I use a proprietary broker it's called Nonco.
Okay.
And I have a direct partner with Logix. So
okay.
Logix is the actual software. Yep.
Okay. I was just now you're caught up in the heat of the moment here. Oh, also about the Oracle. So you never shorted it on the way back up there. You just kind of were scratching your head saying, you never shorted it and got stopped out in that rip-roaring rally there, or did you try it a few times?
The only short I did take was on the 200 simple moving average on the daily, and it was a scalp. So on scalps, this is just my plan. Maybe I'm weird, I don't know. But I know I'm going to get stopped out 70% of the time. So I risk a quarter of my position. So I do what's called the R unit type of trading style. So I trade Rs, which is a huge proprietary thing. And anyway, so I shorted it at the 200 simple moving average, which is at 42.28, and I had to stop at 42.30. So I had 2 cents of risk. I knew I was going to get stopped out. I mean, you just go into scalps going, okay, it's not going to work. If it does, awesome, right? So I'm risking 2 cents. Maybe it rolls down 10, 15, 20 cents of some kind. But it just kept going, and I'm fine with that. So overall, I think I made about 1.67 R or something on the trade.
What was that R thing? You just mentioned that R thing. What? I've never heard of that term. Could you explain that?
Really? I forget the originator of this, and this is really going to haunt me, and I apologize. It might have been Dr. Van Thorpe.
Okay.
I truly do not remember the original creator of it, but I'll give you a really quick example. So R stands for risk unit. So in trading, a lot of people, they don't know exactly how much they're going to risk on any given trade. So let's say you buy Twitter, Facebook, and then Apple, right? People buy Twitter, they're like, oh, I like Twitter, so I'm going to buy 1,000 shares. And they're like, Facebook, I'm going to buy 50 shares. And then Apple, I'm going to buy 60 shares. Well, Facebook, Apple both go up, and then Twitter just gets taken to the woodshed. Well, you make money two out of 3 trades but you lose money on your account. People can't figure out why. Well, it's because you risked more on Twitter than you did on Facebook and Apple. Even though the position size or whatever might have been the same, right? The investment might have been the same. You risk more as far as your actual risk. So an R unit is simply truly going into any trade and knowing exactly how much you're going to lose. As an example, let's say I want to lose $1,000 on Oracle per trade, or $100 or $50. I will say if my entry is 41.25, my stop is 41.55. That's 30 cents of risk. So if I say I want to lose $100 on this trade, 100 divided by 0.30 will give you how many shares I'm going to trade in that interaction.
All right. Yeah. That different terms. Going back to the Oracle here, you really like you're caught up in the 1 and 2, 3 minute. Did you ever pull up a daily here? Because Dennis and I were talking about this. Is actually I noticed that it filled the gap here. Do you ever like pull yourself away from the 1 or 2 minute and then look at the daily here? And you filled the gap. You filled it by quite a bit. I believe that was on earnings too. Do you ever try and pull yourself out of that 1, 2, 3 minute zone and go to the daily and say, wow, you got a little gap fill there, maybe get a little bit of a bounce, or do you look at the longer term charts after the close?
Oh, that's a great question. I actually look at the daily before the gap even happens. So as an example, let's just look at Zoe's today, ZOES. So I'm hopping over to the daily first before, and it's gapping down right now, which is not horrendously scary, but I do have a July 35 put sale. The daily looks really bullish, really extended, really high, and it needs a little bit of a retracement, right? So from here, I'm looking at the daily, and it's gapping down to about 38 and some change. So I look at the daily chart, asking myself who is buying and who is going to be losing a lot of money on these gaps. Are people going to be losing a lot of money, or are they going to see this as a buying opportunity, like Dennis said on Oracle? Are people going to see this as a buying opportunity, or are people going to be losing money, getting stopped out, that type of thing? And then I hop into like the hourly, and then once I like the hourly chart, which I do on Zoe, so I anticipate a little bit of selling on Zoe's today. Probably nothing crazy, but I could easily see us getting to 37, 37.50, something like that. But anyway, if from there, I look at the daily, then I'll go in and look at the 1, 2, 5, something like that.
What put are you short?
I am short the 35 July put sale, so I actually don't mind owning Zoe's at 35. So that's why I'm like, if it comes down to 35 by July, I got 65 cents for it. So that's pretty decent.
34 and change, and that takes you into the gap area. We got the quad witch, triple witch, whatever you want to call it. Trying to look at some market movers here. Do you adjust your strategies at all for a day like this with the big imbalances, or are you still pretty much just sticking to your style?
Man, that's such a good question, Joel. I've been asked that a lot this week about triple witching day. Maybe I haven't been around long enough to really feel it, or haven't been paying that much attention to it. I don't actually have a crazy opinion on triple witching day or quadruple witching day, or as one guy said on Twitter, the witch. He was like, I thought he was talking about somebody else. I thought he was talking about a person. He was like, how's the witch doing Friday? I'm like, the witch? Who's the witch, man? The witch. I thought it was funny. But no, I treat today very, very the same. I don't have any. I know today's going to be a little bit of a volatile day. I know it's going to be kind of I'm expecting kind of a high wave candle on the markets, but overall, I treat it the same.
It actually used to be a lot more, and it's kind of maybe with the people have developed strategies to combat the volatility. So you're right. It's definitely diminished over the years. Anything else on your radar for today? Anything moving?
ConAgra Foods is moving a little bit. It's gapping up, and that looks it looks like a potential play. The daily chart, again, looks a little bullish. You got a lot of white candles. So I'm probably expecting a little bit of a pullback and then a bounce, but the hourly looks pretty good. So
you're going to try and buy this. You're going to try and buy this puppy today, huh?
Day trade it, yeah. I'll probably day trade on the pullback. Yeah, if it pulls back. I mean, if it doesn't, I'll miss the move. But on the pullback, Amazon, Joel, I love Amazon long, man. Love, love, love. Longer. When I say long, I mean long term. Like let's say into October, November.
Okay.
Very, very stoutly that this thing goes a
Wait,
little bit
wasn't
higher. So
this
all
at
I've been
just
doing. Okay.
320? This was just at 420. What happened?
I know, 440 now.
Oh my
It's
gosh,
four.
Dennis was talking about that one. Holy mackerel, what a
Yeah,
consolidation pattern. Little resistance, but
that's right.
Jeremy, I just want to talk to you about this ConAgra a little bit, okay? This is
Yeah,
this
yeah,
is
yeah.
Jana Partners. I mean, someone's taking a stake in it. I mean, it's not to me, I mean, that's somewhat good fundamental information, but
Mhm,
obviously, look at the run up that you had here from 3750 just a few
mhm.
sessions ago. I mean, you don't this might be one of the sell the news, especially if you look at like the average daily range here for ConAgra. I mean, this thing does. Yesterday's range wasn't even 60 cents here, and now you got it traded up nearly $2. Jeremy, I want you to be careful on this one, okay? I'll feel bad if you lose money
I
buying it.
will. No, no, don't feel bad. I lose money every day. I mean, every day I'm gonna lose. I'm gonna lose money on something every single day. I mean, truly, that's just the life, man. I can't worry about losing money or being wrong because it happens all the time. But that's it's like flipping a coin, man, or 50-50. If you're 50-50, you can still be a profitable trader as long as you go in and you mitigate risk, not blow out your account. So the good news is, Joel, you never met me when I was at my rock bottom. I just blew up my accounts and I was just a moron. But at this point, I have a pretty good grip on what's going on. But regardless, I appreciate looking out for me, man. I will be careful on this one. I don't love the gap by any means. I'm not like, oh my gosh, this is the one. I'll be watching Zoe's a little bit more than this one. But
Oh,
I just think that there definitely could be some bullish profit left in CAG.
okay, all right. Jeremy Newsome, CEO of reallifetrading.com, joining us here. Well, glad you're back, and I'm sure we're going to have you on again soon.
You got it, buddy. Love you, man. You guys have a great weekend.
Thanks, Jeremy.